Well, good evening, everybody. How are you? This is Rick with Hit and Run Candlesticks. You're stuck with me for the next hour or so. Hope everyone's doing all right. Back, not necessarily. I was going to say that obviously everyone here is back from their holiday vacation, but with today's technology, that's not true. You could actually be anywhere you want to be. And that's one of the cool things about trading, I'll tell you. I'm going to give it a minute here. Felt like Rand, you're right. This for me, this is. I mean, I've had a great time this holiday season having a new little grandbaby, but man, I'm ready to go to work. I am truly ready to go to work, and we have another week of this lazy thing going on. This next week is probably not going to be that much better than last week was. As far as boredom and slowness goes, I think there was a lot of people made some money, but I think as far as low volume boredom goes, it's going to be about the same. So we just have to get through one more week. Just one more week. Let's see here. B, it's nice. I'm glad to be here to hear my voice. I am. Thank you very much. All good, by the way. All good. Okay. So here it is, Sunday night, December 29th. We're about to jump into next year pretty quick here. And, I hear a lot of I guess almanac stuff. I'm not sure I'm a believer in the almanac kind of stuff. For instance, the way of January tells you the direction of the market. I'm not so sure about that. Sure, sometimes it works out that way and sometimes it doesn't. And it seems like there's always an excuse. Well, it's worked out these years, but, well, why isn't it working out now? And then, like I say, there's always an excuse why. And there's all sorts of trading ideas out there, how you can trade and how to make money, and I think they're all good. I truly do. If you're making money at what you're doing, then it's good. Simple as that. If you're not making money, well, maybe it's not right for you. Doesn't mean that it's bad. Maybe it's just not right for you. And what I have found, and I think what most people have found, we're geared toward short-term swing trading. Short-term, by the way, can be 3 weeks. Okay, short-term is not a couple hours. It's not 2 days. It can be a little longer. So, I think one way to approach the upcoming year is not so much. Not so much all these predictions like, well, the way the market works in January is the way it's going to be going forward for the rest of the year. We have an election year, yada, 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 yada. I think if we just stick with the charts, I really do. Just stick with the charts. We're either, the trend is either moving up like it is here on the SPY. I've got the SPY up. The trend is either moving up or it's not. And one of the best ways, I think, to trade anyhow is, and many people in both Hit and Run Candlesticks, Right Way Options members, they think the same way. And the reason they think that is they're making money. You find a stock that's in a trend, and, the trend can be here. It doesn't have to be all the way up here. Find a stock that's in a trend and just simply look for the little consolidation places. That really is it. And I think if we stick with the charts, I think we'll be better off. Richard's asking Santa Claus rally ? I don't know. Are we having a Santa Claus rally right now? Well, if you ask me, it started back here in October. Then so. Are we still working out here? Yeah. Is there, yet more rally to come. Let's follow the charts. I can't predict what's going on out there past what the charts are doing and the overall trend is doing. I try to hang with just that, Richard. So, like I said, if this recently has been a Santa Claus rally, then Santa Claus started handing presents out back here in October, is what I think. Okay, I do, you know, I'm here. I hear so many things, and I subscribe to probably every free service, just like most people do. And my inbox gets creamed with emails and predictions. I have a box that all that stuff goes to. I literally call it dumper, and it's where it dumps all that stuff. And when I'm bored, I go look at some of it. And man, I can't believe how many the difference between some of those are. Some of them are we are literally bullish forever, and some of them are we're about to crash. Again, I say, let's follow the charts. I think that's the thing to do. Remember, as traders, and these are some things I think we need to think about going into next year, is we're not here to predict whether we're going to keep going forever, or we're going to fall apart and move down. We're not here to predict that this is a top or this is a bottom. We're not here to predict that. What we're here to do, we're not even here to trade those points. I think what we're here to do is, let's start right here. So we have a nice pullback, and that's what we really like to see, pullbacks. We pull back, we see it break out, and basically give that piece of the trade up. Just give that piece right there up. This is the piece we want to start looking at. Let me draw a different line there. Let's do this. There we go. This is what we're looking for right there. And now that might be where we're looking to buy the chart and then trade it for wherever your target may be, or however you may put a target in there. So, that's something to keep in mind. With that in mind, what I would like to do is take us to a chart that I use fairly often. I have 6 monitors, and on one of my monitors, I'll put up a 130-minute chart, which is basically a 3-bar chart. And Friday, this is what we kind of saw on a 3-bar chart. Little hanging man up there, and a little bit of follow through to the downside on the SPY. Now, just because we see a candlestick signal, that hanging man, that's basically a bad candle. Not good for the long traders, the bullish people. But it does not mean that we're just going to come crashing down. It could mean that was the end of the pullback. I mean, it's a candle to be respected. And we're likely to see movement to the downside, or laziness, or sagging of the chart. And that's certainly what we've gotten the 2 bars after that. Let's see, you can see it better now. 2 bars after that. So I think it's kind of important to kind of watch how we end up tomorrow on what we're going to do. Then we've got Tuesday, then what? Wednesday's holiday. Then you've got Thursday, Friday. So all next week could be a little bit soft, hard to trade, to be honest with you. Very hard to trade. So just keep that in mind, what we have right here. Let's see. Sue, I guess it's Sue. Hi, Tom from Florida. Hi. Sue, your trade of the week. That's not necessarily trade of the week. That's chart of the day. Keep that in mind. Okay, chart of the day. And thank you. Let me finish reading here. You got in or would wait for the open Monday. I am not in this chart. No, it's just a chart of the day. Just because I put a chart of the day out. And for those that don't know, what Sue is talking about is on YouTube. I have FTCH was chart of the day, and chart of the day that I put up earlier today. And it doesn't mean I'm necessarily in the chart at all. It just means it's a chart I'm definitely watching and looking to get in. So let me finish out some of your question here. Would you wait for open on Monday morning? Let's see. No, I didn't get in, so I answered that. Would you wait to get in on Monday morning? Well, that's a good question. It really is. And I can't tell you what Monday morning is going to be like. I'm assuming you're meaning tomorrow. I can't tell you what it's going to do Monday. I can tell you that what I'm looking for is to enter somewhere around 990, above 990 and below about 1045. Let me put another little, kind of see it better, I guess. There we go. Inside that red box there, that's what I'm looking for, an entry. Now, one thing I'm going to do is I want to see some consolidation here. Let's get that going. There we are. I want to, there we are, see a little consolidation, and then I want to see a few buyers come in. Now, you realize that there are hundreds and thousands of traders out there in the world, and hundreds and thousands of very successful, profiting traders out there. And if you got all of us in a room, we might kill ourselves because somebody might say, well, this is the dumbest idea they ever heard. And somebody else is going to say, well, this is the smartest idea they ever heard. And one thing I don't do, and this is what I'm talking about, I don't shop for some trick price. I really don't. I'm telling you, I honestly don't. I don't try to get it for $10.16. I'm just going to get in that area somewhere because I'm looking for this to move up to 12 bucks or so. No big trick over here, this high. And then maybe get up in to fill this gap here. So buy it Monday? I don't know. I've gone into cash, close to cash. I'm in 1, 2, 3, 4 positions right now. One of them is 3 longs, and one of them is a long, but it's basically saying the market's going to pull back. And we'll go over that in a sec. But I guess I'm just trying to answer to your question is, wait till Monday? Sure. Wait till Tuesday? Sure. Wait till Friday? Sure. When does it set up for you? When does it meet your criteria? That's the important thing. And I'm sorry it takes so long answering that, but that was really a good question. And I think it's important that everyone understands that if it doesn't matter who you are, if you post a stock out there in the social media maybe, or in a trading room or anything, you got to remember one person might trade it differently than you, but you both may make the same dollar amount. So you've got to understand that. And I hope that makes some sense. One of these days we're going to sit down and really dive into that. Definitely do that. So thank you very much. Let's see here. Thanks, Ed. The chart says 3130. Nope, it says daily right now. Let's see. Is anyone else experiencing some sound difference? We'll skip over that. Thank you, Sue. And thanks for the question. Good question. And by the way, I love that chart. I think it's a great chart. Let's talk about this chart in another way here. I'm actually going to go to this chart. Oof, let's get rid of all that. There we go. This is a back background, and I like the back background when I'm using the red-green. You can see red dots. It's telling me that it's in a downtrend, which you don't need really red dots to see that. Green dots tells me it's in an uptrend. You really don't need to see that either, but it does help out point. It does help to point out the fact that we're trending up. It also helps out if you ever trade a trap type chart pattern. And the trap type chart pattern is when the stock has been rallying and it rallies up to a point and then it pulls back, but it stays above. These green dots are any green dots you choose to use. I use these, which these are just, this is just the 17 exponential moving average. That's all it is. So that's what I'm looking for. And you can see I'm looking for that pullback here. So a nice little pullback right there. And that would make a nice little entry. And you can see that happened right here. We popped up the trend. I mean, a little steep, but there we are, right in there. And the same thing could be said for this right here, right there. And that could have been some entry. And anywhere in here could have been an entry for somebody, different traders, different strokes, and you would have been just happy as a camper on Thursday and probably still happy Friday at the close. So when I look at this chart, this is an RBB, rounded bottom breakout chart. And here's what I'm looking for is we're down. Ooh, that's the wrong instrument. There we go. We move down. Well, doggone it, Rick. Pen. There we go. That's much better. We move down and we kind of put a little, in this case, we have a little dimple there. It doesn't always have to have that. And then we start moving up. When I start seeing that and I start seeing us in a rounded bottom breakout scenario, which that's what that is right there, then I start looking for reasons to maybe buy this. And this is one of these charts that I kind of liking right now. So, let's see here. Let's see, Jake. How do you end up deciding on a specific entry time? Great question, Jake. And that is a fantastic question. Now, I kind of answered it, and I'm going to kind of repeat. And this is important. I look at this chart, and this is where I think a whole lot of people get themselves a little bit sideways in trading because they're looking for that perfect trade. There's only one perfect trade out there, and it's if you make money. It's if you make money. So, let me go back and make sure I'm going to read this well. How do you end up deciding on a specific entry time? First of all, I look 99.9% of the time, my entries are off the daily chart, okay? I don't fool around with intraday charts as far as actual trading goes. Sometimes when we look at the market, we look at 15-minute, hourly, that 3-bar chart, things like that. The 3-bar chart just tells me how today's daily candle is shaping up. That's really all it does. So I look at this, and as far as an entry time goes, if I'm comfortable, and let me remind me, and if I don't explain that, somebody please remind me to do that. If I'm comfortable with, I'm going to look for an entry in this area right there. As far as exactly or what time, it does not matter. I'm just looking for an entry in here based on the price action. So here's a big rule. I think this is a big rule and a good rule to have. Right now, the price reaction is up. I think everybody's happy with the last couple of days. The overall chart pattern is good. So up till here, let's just agree that we agree that it's a nice chart. Now, as far as entry rules go, I'm looking for a pullback, and now I want to see buyers come in. And it might be here, it might be here, it actually might be the breakout. I can't predict where the buyers are. What I can say is I love this chart. As of right now, December 29, 2019, 7:20 Central Time, my time, I love this chart. Now, Tomorrow, I might hate this chart. Heck, I don't know what this chart's going to do tomorrow. And you know what? Neither does anybody else. As far as we know, this chart could be down here. But I have this on the watch list, just waiting for it to do just what I kind of said there. I'm looking for some consolidation. I'm looking to be a buyer, and I'm looking to make money. That's simple. That's simple. I hope that answered your question. In other words, I don't chase some price. If I'm looking at this chart, where do you think I think it's going to go? Well, based on rounded bottom breakout rules, anyone that's taken our classes or have studied the rounded bottom breakout, you know that I'm going to start with that right there. Knowing that piece of information, if I bought it, say at $10.10, would anyone be happy with a 22.5% move? I'm thinking yes. Please don't answer that. Don't even answer that. You're going to mess up the chat. Of course you're going to be happy with that. Of course you are. So that's what I'm looking for. I'm not looking to trade pennies, a pop up and just sell it. I'm not that fast of a trader. Now, I believe on taking profits on the way up, absolutely. And I certainly may take 50% off the table, assuming I'm in it and assuming it goes up. Certainly may take half off the table and then may close it out here. So it's not that I'm looking for some sharp entry. All I look for is an entry in a solid chart pattern close to support, which it is close to support for me. It fits my rules for that support. Let's see if I can get rid of this. That's all right. We're not going to spend time on that. So I'm willing to do that and then, swing it. That's what we're looking for. We're looking for those swings up. Hope that made sense. Jake, thank you. Excellent question. Gwen is asking, are they all options? Is what all options? Gwen, I'll tell you right now, for those that followed, yes, they are. Yes. For those that follow the Road to Wealth account, that is options. There's no way you can have that kind of increase in a total account without options. You can't do that with just straight stock. You can certainly make money at straight stock. I've proven that. But you can't have this kind of growth in an account without options. Yeah. So, my positions are all options. Here, let me run through them really quick. BX. And for those that have been on YouTube, you know that I put a YouTube post on this, trade of the day. I'm in some long calls. I made the video on the 19th. Still long on this BX right here. Another one, which is my little dog, CHCH. I'll take this dog to the pound if it doesn't straighten up. I'm also long CHGG. Kind of floating sideways. I'm not too worried about it yet. I'm not concerned about Friday's candle. Not until we start breaking down through the trend. Coke, I'm in Coke, KO. I'm green on Coke by 35%. And I think it's working just fine. Now, I shared this chart with somebody earlier this weekend, or actually late Saturday, I guess. We were talking on the phone, and they asked me, aren't I concerned that we're at the top of the channel? No, I'm not. The channel is just a line. It's just showing that's where highs have been, and it's pulled back. I guess it really depends what kind of trader you are. I'm not concerned because if it pulls back, it's still holding in that trend. So nothing about price action is telling me that it's starting to fail. Not yet. And if the trend was bothersome, well, man, look back here. Kind of hard to put that line up there. Here, maybe. I guess you could go like that. But you can see how many times it pulls back and it just comes right back up. And these are buying opportunities down here. Buying opportunities. So I'm still holding it. Not concerned with the fact that it's bumping up against the upper trend. It's actually running very well in the trend, if from my point of view. Again, remember, there's thousands of traders out there, and everyone has their own way to trade. So there's nothing wrong with buying, selling, buying, selling, buying, selling. Maybe buy, sell half, maybe, I don't know. But that's where everyone has to have their plan put together. Okay, another one I'm in is VXX. This is the one that is long, but it pretty much says the market's pulling back, I suppose. Currently, I'm 9% at the close. Friday, we'll see what happens. We're still definitely in a downtrend. There's no question about that. This is another one I think I would like to take to a smaller time frame just to show you. But here's that 3-bar chart. And really what I want you to see here is see how that downtrend, the red dots, and now it's trading in an uptrend. That has changed. So whenever we talk about trade the trend, the positive trend, here we are right there. So let's, here's what we might do. Now I'm already in it, but say somebody's looking at this chart. There's your trend. Now what you're looking for is a little pullback or consolidation in this area here. That might offer an entry, the right setup. In other words, you've got to, I wouldn't want to be buying this in this area. Whoops. I'm going to draw, I'm going to make this yellow. I'm going to make it this color. This is actually meant to be, well, it won't work. Let me try yellow. The black background won't let me put some art up there. So let's do it this way. This arrow represents a candle, all right? So there's a bearish engulf. Now I'm not going to just jump into this chart based on that candlestick. Now I may like the chart, but it may not mean it's the right time to enter it. So I'm going to have to let this come down and start maybe bouncing, picking up some buyers, and then coming in. So when I'm looking for a pullback, there's some pullbacks that I don't want to touch. We want a nice, easy, relaxing pullback. Nothing mean and ugly. So, all right, let me get back to some of these questions here, and then I want to make sure I spend some time and we'll look at some charts. So Dolores, how does VIX look to me? Here's VIX. Like I said, I'm long VXX, which is a cousin. We're over the 50 and the 34. I'm going to go back to this chart right there. Whew, been kind of tough on the eyes, isn't it? Need to put some sunglasses on. So we're starting to move up a little bit. We're over the 50, the simple. You've got a lot of headache up here that you've got to deal with. So keep that in mind. Like I say, I think there's some room for the VIX to move up because I think there's a little room for the market to move down. Little room. I'm not bearish at all. I'm just saying there's a little room there. Hey, before we close out, in case I forget, make sure you remind me. I want to do last Sunday or Tuesday, whatever it was. I couldn't get the program up for the Amazon card giveaway. I want to do that tonight, so I have it up ready to go. So somebody please remind me before I close out here. Let's see, Ron, any book of yours goes over all patterns? Any book? No, not any book. No. Let's see. And if I skip something, please skip the question. Please somebody retype it if I did. Let's see. Bob is asking, do you ever enter an option trade as a bracket order and exit at resistance at support? No, I don't. That's another good question. Thank you. No, my job is trading. All right. I'm here all the time. I trade simple, directional puts and calls. That's it. I nothing else. And I'm here all day. So when I buy a stock or an option, a chart, I'm buying it now. And I'm literally here all day. I mean, there's times that I'll tell you I'm stepping away, and I am. I'm maybe doing something, but I'm not far from my computer. So I'll just watch it and I'll manage the chart as it starts moving up or moving down. But I'm pretty boring when it comes to my option trading. I'm extremely boring. Nothing fancy. If I like it, I buy it. If I want out, I sell it. So, see, Richards and Coke too. Good. Get out of Coke Friday, 20%. Hey, way to go, Glenn. Congratulations. That's fantastic. Let's see. Jake is asking, this is a follow-up on when to get in. Sure. I don't have time to be watching the market intraday very much. So it's at the end of the day that I look and see if there's a stock like Fetch that I like. I need to put an order in for the following morning, or you could just buy it, right? I guess so. But let's see. Where am I? Oh, there I am. I put some time in as a limit for the previous close, and then had to pull it back and hit a tight stop and come back. Sorry, this is very small print for me. I end up feeling like I shouldn't have put the order in, or shouldn't have put the order in for a lower level. Look. So let's go back to that stock. All right. This is certainly not a conversation that I wanted it to go, but I think we need to go over here. All right. I think we need to go here. And let's see. I'm going to get a couple moving averages out of here. I want to clean this up. I don't want anything here to be disturbing. There we go. Okay. Like I said, I didn't want the conversation to go this way, but I think this is one of those things. And Jake, I want to say thank you very much for your questions. The way I read what you wrote, and I understand that sometimes what you type, maybe what I'm reading into it, might be two different things. So bear with me, okay? There's 261 people, counting myself, in this room right now. And some people are going to fall into this category, and some people are going to check out right away. You're going to close up, and you're going to say, what a dumbass that guy is. Well, then so be it. Here's the deal, fellow traders. If you're not willing to lose money, you're in the wrong business, all right? So I'm reading from this, you're trying to time it a little too damn tight, if you ask me. All right? That's what I think. If you like the chart, buy the doggone chart. If you're not willing to lose 6% or so, don't buy the chart. Real simple. But when we start to micromanage, and we're so afraid to lose $50 or $100, whatever you're out there to do, if you're so afraid to do that you get stopped out, I shouldn't have done this, yada, 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 then what happens is you end up killing yourself by just stabbing yourself 1,000 times over a period of time until you just bleed to death. And that's where I've been there, and I've known people that have done that. And that's what this kind of sounds like to me. So if you like the chart, you like the chart. Keep in mind that when we buy a position, we shouldn't, although we do, we shouldn't expect it to just go straight up. But we do. All of us do. The reality is, it can kind of bomb around for how long? Well, let's see here. Here's a big old gap. And it pretty much bombed along until Friday or Thursday, didn't it? And then really, it didn't do anything remarkable. Didn't make anybody any big money or anything. Now we need to let this thing bake. We need to let it cook a little bit. So when you say, and this is a common problem, by the way, of people can't sit in front of their computer. Could be a number of reasons. there's not a problem with that. All you have to do is decide you like the chart. That's number one. You like the chart. And if you put that order in to buy it, say above 1017, and let's just do that right there, it fills, right? Well, if you put your stop at $10, that's like begging me to come take your money. That is just daring a bully to come push you. They will come push you. And that's why we have to put our stops a little lower or wait for the stock to come back to our stop. So if that's too much and that's too deep, then you can't buy this particular stock. What you've got to look for are stocks or charts. I should be saying charts. Charts where we've had that pullback and we're down there at that level. If you can't afford that and let it run, and I don't mean if you can't afford it. I'm talking to everybody, okay? I hope that's helpful, Jake. Remember, trading is not about, it's not like going to a roulette wheel in Vegas. You walk up to a roulette wheel, you put a chip down on red and black, they flip the little wheel, and 30 seconds later, you know if you're a winner or not? That's not what trading is. Now, for day traders, but then I'm not a day trader, so I don't do anything with that. For what we do here, that's not what happens. You put your chip in and you let it ride as long as it stays within the area that you feel that it's still working. An example is CHGG. Now, this is my dog. This is a dog right now, okay? I'm not happy with it, but I'm not horribly unhappy. Was I happy about Friday? Nah. It's just moving sideways. Here's a 2-day chart. Look at that 2-day chart. I love it. Here's a 3-day chart. I love it. Here's a weekly chart. I love it. But I'm not happy with the price action only because it's not making me money. So I just have to let this work as long as it stays above whatever level I need it to. And for me, that level is going to be about this $37 range, which there we are there. About this $37 range right here. And yes, I'll let it drop below the green dots. I'm not, I've got to give it room. And I hope this kind of helps you a little bit, and anyone else here. And Jake is asking, do I use the T-line? Of course I do. I'm the creator of the T-line. I use it all the time. Remember, the T-line is like any other indicator on your chart. You've got to decide, do you always use that? Or do you use it under different circumstances? I don't always wear jeans every day. Might be khakis. I don't always use the T-line for every trade. But the answer is yes, I still use a T-line. Absolutely. Ron's asking how you make the green dots. I'll tell you what, if on another day, we can certainly do that. That would be too much for this right now, okay? But we can certainly do it another day. Let's see. RC, VIX does decay, so for those not experienced, use small sizes. Yeah. You have your decay, and that's a good point too. It's a point that I tend to argue against, but that's a good point. So here's the thing. It can decay all at once, but at the close, I'm up $665. So if it wants to decay, that's okay. I've been in it. I've been in it now for a week or more. I'd have to go back and look. Week or more. I've added to it a couple of times, a little bit. I only have 20 contracts, not very much. So this falls under this category of keeping options simple for me anyway. I don't ever look at the decay. As long as I'm making money, if I think of decay in a chart as somebody else is taking some money from me, all right? And that's okay. If you want to take $5 from me, or if you want me to give you $5, okay, but you give me 665 back. I'm okay with that. Yeah, that's not too bad. I think I can do that. I'll throw one down for you. So decay me to death for that kind of money. I'll be happy. So anyway, that's just my take on it, but you are very right. You've got to watch some of this stuff sometimes. Let's see, when you buy option, is there a particular issue you like? In the money, I always look for approximately 70 delta. 70 delta. 65 would do me just fine. 80 would do me just fine, but it's around that 70 delta. Let's see. Greg, options can be a little intimidating for some of us. Do you guys know that I've never traded an option until 2 years ago? And 2 years ago, I opened up that account, Road to Wealth, for $5,100. Today, that account is worth $37,000. I'm up 600. And if everything goes right the next couple of days, I'll be up 620%. So yes, options can be intimidating if you try to bite off more than you can chew. Remember what I said earlier. I simply trade simple directional options. All I'm using the options for is to leverage my money. Don't overthink the options. Like FTCH. If you like FTCH, there is no difference in buying this with options as you're just buying the stock. You're just going to buy. It's a little bit of terminology difference is all it is. You're going to buy calls. That's it. And I mean, right now, I don't even know if this is a good optionable stock. I just put this out as a chart of the day. FTCH. I like the chart. And that's where, whoops, that's not it. FTCH. There we go. Let's see here. So if I go out to February, no, that's not going to be any good. April, I do look for some open interest. That looks pretty good. You know what? I'll take April 17 options at 71 delta. I'll take that. Yeah. And wins earnings, because I'm not going to hold it through earnings. That is guaranteed. So April, that works for me. January is too close, but that might even be better. Heck. We'll see what that is come tomorrow. But, around that, if you want January, which I would tend to go to the February myself, but January, there's an 82 delta, 61 delta, $9 and $10 strike price. There you go. Simple as that. Just leverage my money. And we can, during the trading day, it's easier to explain, and we have more time. That's what makes it easier. We're a little cramped tonight, but I'd be glad to explain that. It's really simple. And I used to think they were complicated. I did. But that's because I was trying to bite off bat wings and butterflies and fly me to heaven and everything, do this, do that. You don't need to do that. You really don't need to do that. There you go. I've spent 20 minutes with stuff coming out of my mouth, and 8-9 words or less. Aaron said it. If you like the chart, buy it. If it goes against you, sell it. Thank you, Aaron. Well put. Let's see, Ralph, can you tell me what settings you are using for the trend indicator? 1010. 0.10. No, yeah, 10 and 0.10. Right here. 1010. and I lay it on the 17. You can lay it on whatever moving average you want. Thank you, Chuck. Appreciate it. Let's see, Jake. Jake has been the trader of the night here. Thanks, Jake. I appreciate your question. I truly do. Thanks for your explanation on getting really helpful. I was scrolling through the watch list the other day and happened to cross FLWS when it drove down to the right, to right above the T line. So I bought it and it found support and then popped back up. You realize that, well, I was going to say the T line doesn't mean it's at support. If you're a T line trader, it's really simple. You buy above the T line, you sell below the T line. It just does not get any straighter than that right there. Let's see, finish reading. That was perfect because it had worked very low risk. I guess it's really about determining how big of a risk I'm willing to take. You nailed it right there. You nailed it. Somebody might look at, let's say you're trading the T line, and here, let me do this right here. Watch this. Ba-boom. Let's just move those dots right up. Now that's the T line. So somebody might look at this. How come my line didn't work? And we're going to do, I always go under that first one. So somebody might look at this and say, well, if I buy that breakout and I put my stop here, that's 3%. Now, to some folks, that's too much. To some folks, that's okay. So you've got to ask yourself, is that too much risk? So if that's too much risk, a couple things could change. One, you could move your stop up, or you could be patient and wait to see if, no guarantee that it is, but wait to see if you get a better buy closer to your stop. I look at the chart, and now you've got to, and before we even get to that point, we've got to decide if we like the chart, right? So we look at this chart, we see a nice, let me draw some lines here. We see a nice little downtrend right here. Now we see it reversing, moving up, and we've broken out of that high. I think these are positive things I'm looking for, or conditions I'm looking for. So I'm looking at this, I'm thinking, that's a nice chart. I really like that. And then we have this. We have a nice chart pattern right there. Nice little pennant. So I'm thinking, I like this chart, right? I do. That's a nice chart. So now, once you like it, you simply determine where you can buy it. And it's not about an exact price. I mean, really it's not. What you've got to decide is where's your stop, and now you want to buy it close to your stop. So what are you willing to risk? Always also ask yourself, what can the chart do for you? This is important. I see people out there saying, hey, I'm willing to risk 9%. Okay, what can it do for you? I'm not going to argue with your 9%. We're all grown-ups here. If you can afford 9%, okay. But what can the chart do for you? Well, it looks like it's going to move up 3%. That's where the big buzzer goes off. Wrong answer. You can't do that. If you're going to look at a 9% stop, you've got to have at least an 18% possibility. I look at this chart, and here's my possibilities. Possibility 1, about right there. Possibility 2, about right there. Now do the math. What can you be rewarded? There's 6%. So that would be like, take half the position off maybe. And then you're going to have to exert some patience, but there's a possible 16%. And I want at least double from my stop to my first half out, because I may end up closing it all. I don't know. That's a nice chart, by the way. But anyway, that's how I would look at a chart. Again, I want to remind everybody that there are thousands of traders out there that if you put them in a room, we would kill each other. Not literally, but we would argue about a chart. But yet we all may trade the exact same chart and make the exact same money. There's many, 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 many ways to skin a cat. And maybe one of the number one things a trader should learn is how you're going to skin that cat. And sometimes it takes a little time. I told somebody the other day, 30 days of a trial is not going to make you a trader. 30 days of some hardcore education is not going to make you a trader. It's just not going to happen. Sorry, but it's not going to happen. And you're going to lose money before you make money. So sometimes you have to sit back and you just have to practice in charts. And it might cost you a little bit to do that. But make sure you have that. This is how I want to skin this cat. Anyway, there's been a lot of talk this time of year about this sort of thing because we're entering a new year. It's like we get a start over now. We get a do-over. If things have been not going so well, this is a fantastic time for a do-over. But there's got to be some hard decisions made. Hard decisions. All right, I'm sorry. Sometimes I get carried away here. Sue, it's on the website. Exactly at this pinpoint, I can't tell you, but it is on the website. The LTA scanner is the place I would look at. That has actually a couple of RBB scans on it, and does it in real time for you. On a losing trade, do you ever sell before the stop loss is hit? Absolutely yes. Good. Man, you guys rocking tonight. Really, I'm serious. Sometimes it's hard to talk here because questions. No, there's not the questions. I'm going to go over to cover your eyes for a second. It's going to get bright. Boom. There we go. All right. So the very good question, by the way. Where are we here? On a losing trade, do you ever sell before the stop loss? Absolutely. Let's say that I'm in this trade. Doesn't matter what the stock is. This is just the SPY. Doesn't matter. Chart's a chart. I'm going to put my stop loss right here. And you know what? Let's go to a naked chart. There we are. So I'm going to put my stop loss right here, right? And I did this all wrong. Let's do this differently. I'm in BX. There we go. So I'm gonna, since I'm up on BX 14 or so percent, I don't want to lose my 14%. So I'm gonna raise what my stop was down here. I'm gonna raise my stop up a little bit. All right. So say 55.45. That's my stop. So now here's price. Whoops. Let's do this again. I forgot I'm on. There we are. Here's price moving down, right? Price moving down, but we're not at the stop yet. Here's the scenario where I will sell it before we get to the stop. Now let's go back to the SPY. I see something like this on the SPY. And I see, which if you have that kind of a candle there, you're going to have some volume over here. Believe me. If I see that happening on the overall market, and I'm in a stock like BX, there we go. If I'm in a stock like not like any stock like this, then I see it moving down. Why would I wait to lose more money? There are days that the bear gets you. You're not gonna get the bear every day. You're not gonna eat steak every single day. But I don't want to lose a lot of money either. So if I see the hen writing on the wall, I'm thinking we need to be out of this thing to limit risk. Here's as soon as I said that, I remembered a chart. Hang on here. Come on, where are you? Seriously? Here it is. Okay. I was in PSX short last week. Made some money. Does anyone, and please don't answer this, does anyone think that it's going to go down further? Yes, I do. I'm one. And please don't answer it. You'll mess up the chat. So absolutely, I think it's going to go down. So why did I sell it? Why did I close the position? To limit risk. I had good money in it. We did a class this weekend. Ed did a class, excuse me. I happened to step in just for a little bit. And I hear a lot of people wanting targets. Well, I happen to think this still has some more movement to the downside. Again, why did I close it out? 1, to limit risk. 2, I had good money. Now I want to ask you, is your target, and your meaning everybody's, and again, don't answer, you mess the chat up. Is your target a line on the chart, or is your target to make $500 a trade, or $50 a trade, or $5,000 a trade? Think about that. That is an important question to think about. So if you, let's say your goal is to make, pen, we'll make this blue, pen, here we go. If your goal is to make $500 a trade, and you're going in on Friday afternoon, and you feel like you need to limit risk, but yet that's some target on a chart, a line drawn on a chart, and that's, I'm not saying anything against that, but which are you going to do? And there is no wrong answer here. It's what you are going to do as a trader. Limit risk. Limit risk. If you don't limit risk, all the winners in the world is just going to do nothing but prolong the big ball peen hammer on the great big toe. That's all it's going to do. You've got to limit risk. I eliminated risk. Close a position. I can get back in. What do you think the chances of this, of moving, now that I've said it, it will, but what do you think the chances are of just going straight, down? I don't think the chances are that good. I think we're likely to get a bounce up. Not tomorrow necessarily, but I can always get back in it and trade it again. So limit risk, limit risk. All right, here. Let's see, Greg, how long do you typically stay in a trade? As long as the chart pattern is doing well, as long as I don't see a sell signal like Coke maybe, or like I say, I've been in VIX now, VXX for a good strong 5, 6, 7 days maybe. I think I actually bought it. I 1, 2, 3, 4, 5, 6, 7. It might have been on this gap down. I've been in this for a while, and I'm holding. So I'll hold it until it either makes me money or it breaks my conditions. It hasn't broke my conditions yet. Not anything in here has broke my conditions. Yes, it's still in a downtrend. Yes, it is. But since I bought it, it hasn't broke any of those conditions. On Fitch, owned it for 2. Way to go. Nice. You're in the money then. It should be. Let's see, for low price, small cap, wouldn't just buying the stock be a better way to go? RC, yes and no. I want to read that question again. For low price, small cap, wouldn't it be just as easy to buy the stock? Maybe, but there you have, if you have to pay, let's see here, if you have to pay $5 for the stock, all right, an option trader might pay, a buck. So is it worth it? It could be to you. I'm not, Please don't take anything here about I've said about options any way other than it's just me talking about them. Let's see, 33 years now I've been trading, 2 years trading options, so 31 years trading stocks. And anyone that's been around a long time, you know that $5 to, we'll say $20 was in my sweet zone right there. Because you didn't have to spend a lot of money. I mean, you could buy 100 shares of a $5 stock. So the answer to your question is, well, maybe and maybe not. It depends. If you don't want to, if all you want to do is trade small price stocks, then you probably don't have, it's not that you don't have to. It's just you might end up with the same results as no. You know what? For 31 years, I traded straight stocks, and I've never increased an account 600% in 2 years. Not ever. I haven't even come close to that. 600% in 24 months. Oh my God. You can't do that trading stocks. You can't do that. So, but for you, if that's what you want to do, that works. That works. Let's see, you mentioned in your email there'd be 10. Oh boy, we've kind of killed time. Let me get through some of that. And RH, well, never mind. Let me get through some of that. Here's CAG. Look at CAG. CAG has been a big pop up. We pull back a little bit. I'm looking for an entry here. With that said, I want to stop for a second, a great big timeout. If you think I'm trading anything this coming up week, you're wrong. You're absolutely wrong. It's going to have to be such a sweet deal. It's going to have to hit me in the head so hard. Why? I want to eliminate my risk. I want low risk. I don't want risk. I can tell you now, 100% of the time when traders fail, it's when the market is in indecision. And I personally think, now I can't predict what this week's going to be, but I kind of think Wall Street is still into their martinis and whatever else they do. So there's going to be low volume. Low volume creates chop. Chop is going to eat your money. So if you want to go dangle, if you want to wrap some steak around your feet and dangle it in the salt water, you go right ahead. But you might end up being fish bait, so be careful, all right? So with that said, CAG. CAG looks like a stock that I might want to take a look at. Nice, well, you can see we've been moving sideways. We had a nice pop up on good volume, and now we're pulling back. FTCH, that was the trade idea of the day that I put out today. Trade chart of the day. That one is setting up. Nice flat trading here. If it starts to run up higher, it looks to me like it's going to get to about 12 and then maybe into that 16 area. Crocs. Look at Crocs. Crocs is trending very nice here, isn't it? We notice how we've popped up and now we've moved sideways. Let's draw a line right in here. Right there. Look how we popped up. We tangled with this October high. We broke out and now we're sliding sideways. Nice little J-hook in the making. Let's put another line up there. There you go. Great looking chart. PINC. You know what? Let's look at some of these just naked chart. PINC. Here's the trend. Let's put another line up there. There you go. You start to break out. That might be a chart worth taking a look at. Anywhere in here also might be a good place to buy. But like I said, careful how much you dangle your feet in the salt water. Campbell's Soup. Look at Campbell's Soup. Look at that little pop out of the box brewing here on Campbell's Soup. Beautiful chart. This is a chart that I kicked myself. I didn't see Friday. I would have bought this Friday. Nike. Nike's moving up. I'm going to put a little line right there. Now that we've moved up, watch for a little consolidation. That's where I think Nike might be worth a look. No money will be made on Nike until it breaks out of 101.50, till it breaks out of this high. But it sure might be nice to capture a little entry in here. Would not be afraid to even pay higher for it. Let's see. Oh, yeah, info. There's info. Look at the trend on info. Look at that trend. Yipers. Look at that. This is sideways consolidation right here. Let's put a line right there. There you go. There you go, right there. That's a nice chart. That's another one that probably should have wished I would have bought. Coke, I'm already in. MasterCard, look at MasterCard. Let's get rid of that. Let's put this line up there. There you go, there. Look how this, let's do this here, arrow. Look how this thing, it just moves up, consolidates, up, consolidate, up, consolidate, up, consolidate. Man, how nice is that? Now, we just broke out, didn't we? We're right in that buy area right here on MasterCard. AES. There's AES. There's a nice little pop out of the box popping up. We had this little breakout right here. We've broken out now, that little area. For those that aren't familiar with the buy area, the buy box, there you go, right there. Just in that area. AES, AES. If it started to get below these highs right there, around that 940, 945 area, I would not like it. So that would be where the stop area would be. Cats. There's cats. Look at that consolidation right there. That's what you're looking for. We're right at the top. So now what we're looking for on this one, unless you're already in it, if you're in it, you manage it, look for that breakout, watch for some consolidation, and then buyers stepping in. And there's your J hook or your continuation pattern. We'll do one more, and I think I've reached my 10 for you. Let me find one. Oh, Roku. There's a short. Roku. Now, on Roku, this is a 2-day chart, by the way, just so that I can, nothing tells me anything different. It's just so we can see more of the chart. So on Roku, we've got a top here. We gapped down. We failed right here, and we made a lower low. We've popped up, and we've actually failed to make a higher high. So what I'm looking for on Roku is to stay below this 151 area, and that might be a little short. Now what I'm going to do is throw some moving averages up there, and there's the 2-day chart just like we were on. So anything below that 151.50, we're looking for it to move back. It starts taking out these lows here, the lows here, the lows here. It puts us down into the deuce area, which is the 200 simple area. But we're going to have to break down just a little bit more. And there's a nice little bear flag right there as well on this. So there's a possible short. And then that PSX. I think that still goes lower right there. So there you go. There you go. Let's see. You figured it out. Okay. Well, put Aaron basic trade. Hey, Aaron's a good trader. Aaron's a member of Hit and Run and Right Way both, and he's an excellent trader. So I'll tell you, when he speaks, listen. Let's see, how do you get target 2? Target 2. I'm trying to remember what stock I might have said that in. FTCH. I'm just going to do that one because I know that that one's there. There we go. All right, so if you're looking at a rounded bottom breakout, target 1 always starts with the dotted deuce, and it ends in this, and the last target is always the 200 up there. Now, from that point, what we're going to do is add a couple more targets, because there's always something else in there that's going to give you that area of, where you may see some resistance, like 1135. Now I'm going to just kind of go over here and crunch that down. There's nothing over there. So this is kind of a free space in here. So just for fun, I'm going to put a line about the center. So there's 4 possible targets. All I'm using is moving averages and price action. So the first line, it went to the dotted deuce, which I might adjust that just a little bit. I mean, that's just the go-to to start with. This one here is based on price action over here in, let's see, August, based on price action. This one right here is based on both the 200 and price action right here. Remember that target areas is nothing more than peaks and valleys. It's a place where the bulls and the bears have had a battle as well. So peaks and valleys, and then where the bulls and bears have had a battle. So that's all they are, really. All right, wow, I didn't realize what time it was. Okay, everyone got your ears on? So on today's, what I want you to do, here we go. We're going to pick a winner for the drawing. Let's see, comment must contain, nope, right there. Pick a winner. Okay, is there somebody named Michael Teaford in here? Teaford? Teaford. If there is, I need your email in the PM me your email, or you can post it in the chat, your choice. And by the way, for those that don't know, what we're doing here is giving an Amazon gift card away, $100. You've got to be here, so if Michael doesn't answer, we're going to pick another one. And I'm using YouTube to help pick it. YouTube and a program called TubeBuddy. And what it does is and I'm taking today's video, today's trade of the day. So if you left a comment or something like a thumbs up or something in for that video, then you stand a chance of winning a $100 gift card. Let me see here. All righty, let's do it. We're going to do another one. Let me get it brought up again. And here, just so everyone sees, here's what I'm doing right here. So here's the video, TubeBuddy, and then, whoops. Let's see if it's going to let me do this. Right here. You see right there, pick a winner. And all comments, pick the winner. Thomas Volgasinger? Thomas Volgasinger, are you in the room? If so, please post your email. You can PM to me if you'd like, or just put it out in the chat. Either one will work. Thomas Volsinger. So what we'll do is we're going to continue to do this, but remember the way you can be a winner is to go to YouTube, go to my YouTube channel, leave a comment, and then we'll go. And I'm gonna go to the. We're gonna pick one from the previous chart of the day. So we're gonna pick one more. So there's that winner. So now we're gonna come over here and we'll go see. We've 2 from the one today, and now I'm gonna pick one from the AMD follow-up. This is the AMD trade follow-up. So we're going to come over here, TubeBuddy, go down here, pick a winner. Again, choose from all comments. And there we go. Ken may be here. Ken Co? I'm probably saying that wrong. I apologize. Alrighty. So there's 3 winners right there. If you're in the room, leave us your yeah, isn't that pretty cool? Leave us your email. You have to tell me what it is, and then I'll go. We'll get this taken care of for you. Alrighty, I'm going to close this out. We're going to move this out of the way. Okay, I'm going to sign off here, but I want to say something. Trading is not always about targets or entries or anything. Sometimes targets is about you as the trader. An example is I think all charts can be traded. I don't think you need to know that CAG is a good chart. I don't think you need to know FTCH is a good chart. I think everybody in here is a good chart picker. I seriously do. I've seen what you've done. The key to chart trading is not picking the magic charts. It's about how you manage your trade. That comes with practice, and it comes with keeping notes about your trade. It's about having a plan. It truly is. So, and the plan doesn't have to be elaborate. It really does not. In fact, if you can keep it on a 3x5 cue card, there you go. Put your plan on that cue card. You don't need some elaborate 14-page single-spaced plan. You really don't. So I just want to leave everybody with that. If I don't hear from you or see you, I want to wish everyone a happy new year. If you're here in the room Monday, I will see you Monday, and I will definitely wish you a happy new year. And I want to say thank you very much for everybody being here. Roger, it is great to be back. Thank you. Getting stronger and stronger by the day. It feels wonderful. So you guys all take care, and we'll see you sun up tomorrow morning. You all take care. Have a great evening.